Tesla delivered 180,000 vehicles in the final quarter of last year, bringing them to almost 500,000 cars for the year. This was up from a record 140,000 vehicles in the prior quarter, and no one thought this was possible for Tesla to achieve. However, Elon Musk in 2014 estimated that Tesla could deliver 500,000 cars in 2020, and to achieve that is pretty amazing. So in this video, we're going to take this knowledge that we have about deliveries and use it to estimate how much money Tesla will make in Q4 of 2020, which they will report in under 2 weeks from now on January 27th, and then I'll give my opinion on what to look forward to for 2021. So let's get started. But first, please hit the like button at any time if you're enjoying this video. We'd super appreciate that. Be sure to subscribe to get our latest Tesla content. I've noticed on our last video that 95% of you are not subscribed. It takes about 1 second to subscribe, and that would be extremely helpful to us. Also, stop using Yahoo Finance, stop using Google Finance. Have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 9 years, and it's all freely available. Okay, so let's have a look at my estimate for Q4 of 2020. This spreadsheet is available on our Patreon for free at patreon.com/themarketisopen, and I've got the last 3 years of data here, and you can plug your own numbers in and try to estimate Tesla's profit for the last quarter of 2020. I'm going to walk through what I did here, so let's begin with automotive revenues. Tesla sold 140,000 cars in Q3. We know that they hit 180,000 in Q4, so I've simply taken that into account for revenues. Usually as they scale, the price per car should come down a bit on average because they're not growing Model S and X, which are premium priced cars. At the same time, Model Y continues to increase, which has a higher selling price than Model 3, but this number ends up usually a little bit lower than my prediction, so I've rounded down a bit. In terms of leasing revenues, I'm a bit surprised that this number hasn't gone up much quarter over quarter, considering that Tesla is selling many more vehicles, and actually a higher percentage of those Model 3s and Model Ys have gotten leased. So this is usually spread over the term of the lease, and they delivered 140,000 cars last quarter. I'd expect leasing revenue to rise at least a little bit due to all of those new leases. That could come later down the road, but it's a small percentage of revenues anyway compared to the actual sale of vehicles. So that brings us to $9.6 billion of automotive revenue, which would be a record by quite a margin. In terms of energy and storage, this is made up of batteries and solar. The battery division has been battery constrained for the longest time. They were diverting resources to the production of cars instead of storage devices, but last quarter we saw a big jump in battery deployments. I think they can repeat what they did last quarter and maybe increase it a bit. And in terms of solar, it's still a very small division right now, and it is winter time, so I think solar will increase, but it won't be too meaningful this quarter. In 2021, however, Elon Musk is saying that the solar roof, being a killer product, will become obvious this year. So I think that can help the energy business if that's true, because each solar roof is about half the price of a Tesla vehicle, so it has the potential to really move the needle, and they are ramping up solar roof production. So I said $600 million altogether for Q4, which might be conservative. For services, I grew this number to $650 million. There's more cars on the road all the time and more cars coming off of warranty, so services revenue I think will increase, but services still lose money. I don't think that will change, and it'll be offset by services expenses, as we'll see in a moment. In total, I estimate that Tesla will have about $10.9 billion in revenue. If we have a look at the analyst estimates, they're calling for just slightly over $10 billion in revenue, so I think Tesla may be able to come out ahead of that. Moving now to cost of revenues, I used the same proportions from the previous quarter to get $6.8 billion in automotive sales costs and $147 million for leasing. Leasing is in fact very profitable, but again, it's spread out over time and makes up a small portion of the revenue, so it ends up not being that significant. Total costs are close to $7 billion for automotive. Now, although energy generation and storage is growing, Tesla is still cutting prices to reach a larger market and to expand. So I don't think this division will contribute much to profitability until Tesla is happier with the price for consumers. They always seem to make about $10 to $20 million in profit here, so I've left that about the same, but I think over time, similar to how the Model 3, there's a threshold for when the price is right for demand, and at the same time, production is high enough such that they start becoming much more profitable as they reach economies of scale. I think we'll see that for energy, especially as Tesla ramps up the new 4680 battery cell production over the next few years. Also for services, I expect the costs to still outpace the revenue, as I said earlier. It would be nice to know what needs to happen here to break even without raising prices on consumers, of course. Elon Musk has said in the past that he doesn't want services to be a profit center for the company, but still, at least breaking even would add a lot to Tesla's profitability. From a consumer perspective, the most ideal thing would be to not need service at all, or very little, and so it would be interesting if Tesla continues to tackle that problem to keep service costs low, and because Tesla loses money here, they're aligned with their consumers in terms of lowering costs. That said, I don't see that happening anytime soon, and I think Tesla is opening service centers quickly, which is costing more, but it's worth it, because it ends up helping with the sale of more vehicles. People feel more comfortable buying a Tesla if there's a service center nearby. So that brings us to $8.2 billion of costs and thus $2.6 billion of gross profit, which is 26% higher than the last quarter according to my estimated numbers. Now we move to operating expenses. I think Tesla continues to hire people. They're also building 2.5 terafactories in Berlin and Texas, and they're still building in China. I'll count that as a half. So I said $375 million for R&D. That's up from last quarter. You can't count the second quarter of 2020 because it's artificially lowered due to temporary salary cuts that they had during the pandemic shutdown. But I think the hiring trajectory is higher. For SG&A, Tesla has generally been very good about cutting costs here, but they did deliver 180,000 cars this quarter, which is about 25% higher than the last quarter, and they've never done that before. I think if it was more consistent, then Tesla could work to cut costs here over time, but because it's the end of the year and there's a spike in deliveries, I don't think they've really gotten the chance yet to optimize this, and they were probably doing anything they could to hit 500,000 deliveries this year, including spending like crazy to make sure all of the cars got delivered. They even offered free full self-driving to anyone receiving vehicles in the last 3 days of the year because it's always pretty crazy. So I think this expense will rise to $1.1 billion, and over time, I expect to see Tesla try to reduce this and improve their logistics because that's like a 10% hit to their entire revenue, so it's meaningful enough to pay close attention to it, and it's a great way to cut costs and to increase profit. Anything they can take out of sales, general, and administrative goes basically straight to profit. Perhaps Tesla is banking on drastically cutting costs in the future when Teslas can deliver themselves. So this translates to $1.132 billion in income for operations. Interest income will probably stay the same or go down, interest rates are low, and interest expense will probably stay the same too. Other income is usually affected by currency fluctuations, and they took a big hit last quarter, actually every quarter this year, so I expect another loss here. I said about $50 million. It's entirely possible that this goes in the other direction, but we'll see. That brings us to $925 million in net income before taxes. I used a 33% tax rate for provisions. Apple pays closer to a 15% tax rate based out of California, but Tesla actually used 33% last quarter. They say that it was primarily due to increases in taxable profits from foreign jurisdictions. So I used that rate in case it stays the same for Q4 as well, which I do expect. This results in $620 million of net income, more than double last quarter. So although revenue increased by 25% or so according to my estimates, this translates into a doubling of net income. We're starting to see Tesla's leverage here. It also looks like they bought back their non-controlling interest, so I set that to $0. Tesla also issued $5 billion of new shares this last quarter, or about 1% of the company, and they normally issue about 1% in compensation and such. Therefore, I boosted the share count by about 2%. So with the new estimated share count, basic earnings is estimated at 65 cents per share. Now, my estimate may not seem like much, but it's double what they earned last quarter. And to me, that makes sense because every additional car that they deliver after they break even, around 85 to 90,000 vehicles, more of that goes straight to the bottom line. Also, this shouldn't be confused with the analyst estimates of 89 cents per share. Analysts estimate using the non-GAAP numbers. My estimates are GAAP numbers, or the generally accepted accounting principles, and the non-GAAP doesn't take into consideration the share-based compensation, and so the number is usually a little bit higher. My estimates would be a bit over $1 per share, so I think I'm still well ahead of what the analysts are looking for. Also, it's important to realize that Tesla was earning about 56 cents per share in the second quarter of this year before they split the stock 5-1. And now, after the stock split, I'm estimating 65 cents per share, which is slightly higher than that number, but really it's 5 times higher due to the stock split. So just in 2 quarters, I'm looking for an over 5x increase in earnings, and their deliveries are up about double between Q2 and Q4, which is pretty crazy. So Tesla delivered about 500,000 cars in 2020. I'm interested to know how many cars you think they can deliver this year. Let me know in the comments. For this year in 2021, I'm estimating that Tesla will be able to deliver close to 1 million vehicles, and I'm betting that Tesla will set that as their full year target goal for 2021, similar to how they targeted 500,000 vehicles at the beginning of 2020. If you look at their capacity at the end of Q3, that's only 3 quarters the way through 2020, so not even the end of the year, they have an 840,000 vehicle capacity. While they're not at 100% capacity, I'm betting this will increase when they give us the update for the end of 2020 on January 27th, mainly because Model Y in Shanghai is completely unaccounted for in this chart, and they're just starting production this month. We'll see if they add it to the Q4 letter because it was built at that time, even if deliveries are just starting now. Also, in the second half of the year, we should begin to see Berlin and perhaps the Texas factories come online with more Model Y, and we may even start to see some semi-trucks and Cybertrucks by the end of the year, which will also be incremental capacity for Tesla. So that's why I think they can double their deliveries this year to 1 million vehicles, so I think that should be pretty exciting. Well, I hope you guys enjoyed this video. Please hit the like button on this video. We'd super appreciate that. You can support us further on Patreon at patreon.com/themarketisopen. Your support helps us to continue to make great content. Thank you guys so much for watching.